Hello, my name is Adán Jiménez. I'm a senior in the AIM program studying finance and economics, and today I'll be pitching Frontdoor, ticker FTDR. Frontdoor operates entirely in the United States through a large network of over 17,000 independent contractors. The company provides household repair and maintenance services for various home systems and appliances, primarily through a subscription model. Frontdoor is the market leader in the home service plan space, with approximately 45% market share. With less than 5% of American households currently subscribed to home service plans, the company finds itself at the foot of a largely unpenetrated market. As shown in the chart on the right, the total addressable market of home services in the U.S. is about $400 billion. Frontdoor operates primarily in the repair segment, but has recently launched initiatives to expand into maintenance as well. The company's services benefit both homeowners and contractors. When home systems break down, homeowners often spend countless hours looking for technicians online, which results in poor quality and expensive repairs. Contractors, often small firms, suffer from high seasonality of work orders and often struggle to find leads. Frontdoor's scale benefits both parties in conveniently making the connection between them. The company's subscription model results in a high level of recurring revenue at approximately 70%, and its use of independent contractors and digital marketplaces creates a very capital-light company. Frontdoor's leading position and new initiatives, which I will discuss soon, leave the company well positioned to drive share gains. The company has four main operating segments. In the real estate channel, the company markets its services directly through real estate brokers, and subscription plans are often included in the closing costs of transactions in exchange for a small fee. In the direct-to-consumer market, the company operates with traditional advertisements online, on TV, and in the mail. The renewal segment is a combination of both real estate and direct-to-consumer customers who have renewed their subscription plans. And finally, the other segment, which has historically been insignificant, but recently with the development of the company's on-demand offering Can Do, this is projected to be an area of high growth going forward. Shown here is an example of the company's home repair plans offered primarily through their American Home Shield brand. The company has plans that cover systems or appliances, but their most popular option is their plan that covers both. They also give customers the ability to choose their trade service call fee, where a higher service fee results in lower monthly payments. Their most popular plan, shown on the right, is used by about 75% of their customers. The following are the key drivers for the company. As the market leader in the home service plan space, Frontdoor has developed an economic moat with their contractor network of over 17,000 contractors. More importantly, about 80% of work orders are completed through their preferred network, which is a subset of contractors that the company deems as the highest quality, therefore boosting customer satisfaction and retention rates. In exchange for a guaranteed portion of the claims filed through Frontdoor, the company benefits from labor rates that are nearly half of their other contractors. Next, the company has recently worked on a dynamic pricing model that leverages their technology to better match anticipated costs and claims to the price of subscription plans. Historically, the company has had generally flat rates that were determined based on the state in which the services were provided, but with this new model, the company will be able to factor in many different things such as the age of homes, the location, and the complexity of systems. Finally, as I mentioned before, the company has recently launched Can Do, their on-demand version of their home service offerings, which allows the company to reach homeowners who are otherwise averse to subscription plans. The company also has recently started to offer maintenance services such as landscaping, pest control, and window cleaning through their One Guard brand, which further expands their addressable market. Shown here are a list of companies that also provide services via online marketplaces, which I believe are helpful proxies for the valuation of frontdoor. As shown in the tables here, not only are these companies similar in their fundamental offerings, but also across a wide range of metrics. The companies highlighted in yellow are the ones that I used for my relative valuation. ServiceMaster is the company that frontdoor spun off from in 2018. Shown here is a summary of my forecast and valuation for frontdoor. I'd like to highlight operating margins as I believe they're particularly significant in painting the picture of where the company is at this stage in its life. As shown, I have projected a steep decline in operating margins in 2020, resulting from increased claim rates in a stay-at-home environment where homeowners and their families are utilizing systems and appliances much more than they otherwise would. This is coupled with management's decision to increase its marketing spend to promote Can Do and other service offerings. I believe that increased claims will drag margins slightly in the early part of 2021, but more importantly, I believe that management will continue to increase their marketing spend in order to drive their top line growth. However, I believe that in 2022, SG&A spend will begin to normalize, and the company will see approximately a 100 basis point benefit in gross margins resulting from their dynamic pricing initiatives. It is important to note, however, that operating margins will not reach the level at which they were in 2019 as direct-to-consumer sales outpace real estate sales, which carry a higher advertising spend. Now on to risks associated with this investment. First are the increase in claims resulting from the stay-at-home environment that I just mentioned. That's certainly something that's been factored in. However, I believe that overall, as customers utilize these services more, that will have a benefit on retention rates. And I also believe that the company's dynamic pricing will help offset some of the increase in claims going forward. Next is the company's acquisition of Stream, which is an augmented reality smart technology platform that the company intends to utilize to better assess problem areas in appliances and systems, even virtually, which is it's a neat technology, but synergies from this acquisition are yet to be realized, and further investment in this project could hurt the company's ability to execute other initiatives. Finally, the company has accumulated over $900 billion in debt, resulting from the spinoff of ServiceMaster in 2018. This is certainly a significant level of debt, which restricts the company's ability to access further financing and engage in M&A activity. However, I believe that the company generates strong free cash flow, as well as already has a fair amount of cash on the balance sheet, where this isn't a particularly large concern. I'd just like to briefly highlight CEO Rex Tibbins, in that he has a long history of experience at high-performing tech and service companies, namely Dell, Amazon, and Lyft. He has been appointed CEO of frontdoor following the spinoff of ServiceMaster in October 2018, and I believe that his experience in operations and logistic management will benefit the company in scaling their expansion projects. In closing, I believe that frontdoor is a company that offers very valuable services to homeowners and a great benefit to contractors as well. I think that the company has made the right initiatives post spinoff, and that there's a very large and attractive market in which the company will continue to expand. For these reasons, I believe that frontdoor would be a great addition to the AIM Small Cap Equity Fund.